Hi everyone. So today let us see what we have. So today I just wanted to give uh, overview and go through the assignment that I had completed recently. This was for an EV finance company, and they wanted to create a BRD. They wanted to launch a loan product, and since this was the first time I had explored how does a loan management system, loan origination system, everything works. So I had consulted multiple research paper, but so this is the BRD I had prepared. BRD is a business document mainly for high-level stakeholders and to guide why we are solving this particular problem, why we are interested in it, and it gives a brief high-level overview of all the features that we are trying to build that are in the scope. So, uh, how the document is structured is we have given an introduction and there is an objective. Introduction consists of what is the uh, requirement all about, the industry, the market, what is the potential future market size of this, and what is the problem that where we are trying to build a solution around this. So since this was an EV two-wheeler sales, so from the report I found out that 60% of the new two-wheelers or three-wheelers would be 60% by the 2030, and today they are 5% of the overall two-wheeler sales. And total finance market for EV will be around $44 billion by 2030. And then we move into objective. Then there are functional components. Then there are related components, and then we have references and open question. Functional component consists of feature that has to be part of that uh, solution that we are building. So feature four features were described, and fifth one is just a user matrix. So different users, uh, those who are part of this solution that we are designing. So I will go one by one and try to explain a brief overview that what all this is about, and maybe I can. Design is not pretty quite clear. I will see that I will go on the link from where I created, and then we can see. So I just explained. So in a financial market, there are two types of mostly consumer or how the finance company uh, differentiates between two user is someone who is this NTC is someone who is new to the credit, someone who has not taken any credit before and do not have any credit history. So most of the user, those who are in the EV financing, those are asking for a loan or they are new to NTC, they are new to the credit, they have not taken any credit before. So for them, this credit becomes quite a challenge because they have not taken credit, they do not have any collateral, they do not have any finance companies do not have any uh, logic or rules or credit criteria to give loans to. So that is why most of the traditional financial commercial banks they avoid such uh, credit category, and mostly those who are operating in the EV finance market, mostly those who are NBFC, non-banking financial companies, they have been mostly active in this EV financing, and they have been giving loans, and most of the share of the loans is through NBFC. But NBFC have a problem. The problem consists is that they have a high cost of capital. Capital borrowing for them is very high cost. They are charged a high rate of premium, high rate of interest, and also the another set of challenge with the EV market is that since this is a quite a new market, so there are very no any established frameworks so as to how to collect those credit or how to structure the credit, how to identify the consumer segment itself, and how the after sales and market that works. So the research paper that I consulted, it was very, I think, this research paper was initiated by SIDB, and they had done a pretty deep groundwork consulting with the industry players, with the government institution, with the credit market, with the actual player, the EV market, the EV OEMs, the equipment manufacturers, They have consulted multiple parties, and after that they produced a report, and in that they had described various risk mitigation criteria through which the EV financing companies can consolidate their business and give out loans or structure their credit there that they are offering. So moving on to the objective part. So our objective was to build a technology solution for a two-wheeler EV lending process. That was our client. So the main part of that solution we were building. So main part would be customer onboarding, automated loan origination, loan servicing dashboard for compliance officer, and fourth one would be a custom report related to products related to customer support solution. That was the four features that we had to build in our solution. Then we defined the scope of this document. The scope of is related to business requirements of designing the solution and implementing how it will be implemented. So the first part would be customer onboarding. This is the functional component. The first part would be customer onboarding. How any new customer is onboarded to our platform, the lending platform. So it is not clear. Let me click on the link and see that if we are able to see that. Okay, maybe it is taking time. I had created this some time back, and it should be visible. So there are multiple ways in which consumer uh, is onboarded or discovers our platform. Maybe it is through the marketing that we have done. Maybe it is through the third party that we have hired or a broker that we have hired. Okay, maybe now yes. Now it seems that it is visible. So here I have just described the consumer part, that they open a sign up page and they input their, now the things that I was just describing earlier, it comes before the sign up page. When consumer comes through or discovers our platform, they assign through third party or anywhere. But now here I'm describing the mobile app or the web page that we have on the internet, and consumer has landed over there. So how they go through that process there, that I have described you. So they click on that open page and they have to input their mobile number, or they have to select a third party, maybe Google or Facebook, anywhere, and we check that if they are an existing account or no. If they know, then we input their mobile number, they create their password, then there is a verification of OTP. They go through onboarding questions and tutorial, and a new account is created for them. And supposing that their account, their mobile number that exists in our database, so they are navigated to the login page, and maybe they can input their password if they have forgotten. Then again, they click on their forget password. I have not included that flow, but they can do that. And yes, if they come through that third party through Google or Gmail account, then again they go through the onboarding questions, new account is created, and supposing that they do not have an account, then they can log in. If they had previously created an account and forgotten their password or username, they can log in again and access visit last page. Now here they can apply for a two-wheeler loan, since we are mostly focused on the two-wheeler part. Then they check their eligibility, there is a KYC verification, there is a video call based verification. Then again they can apply their loan. So when they apply their loan, so that part, that is where the loan origination process begins, or this eligibility part also comes under that loan origination process. Then their loan is processed and it comes in. So this is a onboarding part, and here I have described all the data requirements that where this is I have differentiated based on the stages. When their account is created, then there is a process. What does they do here? They describe, they log in there, and what is the decision or outcome they are making. New account is created, loan application, the application is submitted, he applies for necessary documents, detail application is submitted. Now coming to the loan origination process, this is the second feature. Now this was the complex one, because all the risk, okay, I should show it here, it is quite clear over there. Yes, LOS flow chart. So mostly there is a credit report where each application is judged based on the scores they have. So again, starting from the once they've applied their application, they have filled in their details. Now their application goes for the processing. And supposing at the processing only, if they are decided that they are part, there is some issue, a basic issue check with is done where they have not filled out some uh, required criteria or some fields, then they can go back again to the application process that is returned. Now another part of this application processing is the fraud detection part. We detect at the application level itself that the criteria, the details filled and the all the required parts of that application, if they come under the any of the signals that our fraud engine uh, detects, then that application is again marked to the end of it. But I think there should be, I have to research, there should be a process of informing the customers or the user who has applied that why we have found this application to be not eligible or why this is a fraud. So most many companies, they do have a inbuilt fraud detection engine, or they do integrate the third party application for this. So this is the fraud detection engine part. And now moving on to once that application is processing starts, so they go into the LOS application process. Now the LOS application, loan origination process, consists of two key processes. First one is the underwriting, second one is the pricing part. The underwriting consists of this three parts. There is a rule engine, there is a credit report, and there is a risk assessment. Now that risk assessment is quite different from the traditional loan portfolios or the that people get, like home loan or a car loan or uh, any loan for business loan or anything else, because EV specific risk are little different, and how they are mitigated is little different. That will go in detail in little later, but let's move on. So the first part of this underwriting process is the rule engine. Now what this rule engine is, that supposing a fixed uh, rule, we have created a particular logic for underwriting a particular loan, and that logic could be anything. Supposing that their credit report is not around less than 700, or they are new to credit, so we have created this rule, a fixed rule in that engine, that anyone whose credit report is not less than uh, not more than 700, they are automatically rejected, or they are more thoroughly checked, or they go into manual check. Anything can be there, but the automatic part of that fixed, that rule can be fixed also, or that can be configurable also based on the multiple criteria. And now coming down onto the risk assessment part. Now for the EVS specific risks, these are some of the risks that I found in that report that I had studied. Now, counterparty risk, product risk, operation risk, repossession risk, residual risk. Now, I'll explain this one by one. What this counterparty risk means. This is actually EVA specific. Now, counterparty risk means that the loan which is uh, given to the person, that is a risk for the company which is providing the loan. So that is where the term counterparty comes. The party which is counter to the main party. Main party is the loan giver, loan platform, those who company which is financing company who is providing the loan, and party is someone who is taking the credit or the loan. So for them, that is the first risk, that is for the financing company, counterparty risk. So how this risk is mitigated is through telematics data. Now, what is telematics data is each of the EV vehicle has a telematics. Telematics, it is a physical device which measures all the vehicle's performance, vehicle's location, vehicle's battery status, everything they provide, and that is directly sent to the financing company or a third party which manages those risks, or taking care of vehicle repossession or anything like that. Now, so coming to the second part of risk, the product risk. It is where most of the financing company, traditional banks, they do not have a very thorough, or you can say accurate way to calculate the risk associated with the product itself, because EV industry is quite new, and also the major the cost of this EV vehicle is the battery itself. So battery is more than 50 or 60% of the actual cost of the EV vehicle. So many of the companies you would see in a EV market, they have tried to sell the vehicle separate and a EV battery electric battery in a separate itself. Battery goes through multiple payment of installment. So that is second part of risk, and third is the operation risk. Operation risk is again mitigated by the telematics data. The performance of the vehicle, the performance of the battery, the quality of the battery is quite unaccurate, or there is no fixed criteria, established guidelines from the government, from the industry. It has not been a significant chunk of time for the market players or the financing company to actually evaluate those risks, that how that vehicle or the product will perform in the actual market or in the on the road. So for them, that is a big risk. Again, coming to the fourth part, the repossession risk. Repossession risk is the again mitigated by telematics data. Repossession is the supposing that someone has defaulted on the loan, they have not paid installment for 1 month, or they are late on their payment. So repossessing their vehicle, acquiring that vehicle or that product, that becomes a risk for the financing companies, because given their size of uh, operation, refinancing repossessing the vehicle takes an additional uh, resource for them. So that is a risk for them. Now, last risk, actually in the actual report there are other risks also, but I have in this I have included only this four or five risks. The other risk is the residual risk. Residual risk is the once we have repossessed the vehicle as a financing company, I have repossessed those vehicle. Now I need to sell that vehicle so that I can get any of the value, or I can anyway compensate my loss. So I need to sell that vehicle. So for selling that vehicle, I need to actually evaluate the residual property value of that vehicle. So identifying that, uh, evaluating that properties value, and that is also a risk for them, that there is no thorough market standard or anything like that for them. And that is where a secondary sales market comes into the play, because in the traditional financing companies for cars, for homes, you have a very good market for selling that house or selling that car that you have repossessed from the consumer, because you would see in a normal newspaper that bank is selling multiple cars or multiple properties, jewelries, homes, which they have repossessed when the consumer is not able to uh, complete their loan term or installment. So these are some of the de-risk measures. These are EVA specific de-risk measure. The secondary sales market has to be created. The product quality assurance has to be made from the government side, from the industry bodies, that this is the quality we are authorizing for the especially to the batteries, because batteries are a significant chunk of the actual risk that the uh, loan entails. Now again, once this LOS process, origination process is completed, then loan is offered. Once loan is offered, then it has to be accepted. When it is accepted, then it is approved, and the final check is done before loan is disbursed to the uh, consumer who is asking for it, to the user. So this was the second feature that we had to build. Now here again I have described the LOS process, credit report, NTC, and we check what we do here: EV affordability, charging cost, the potential of replacement, if there an insurance for it, the DRM application, de-risking measure application, what were the different telematics data, the income verification, vehicle usage, secondary sales market data, what is the quality assurance for the warranty and risk reward ratio for this, and how do you price a loan, because in the just I explained, the banks, traditional banks, they do not have a fixed criteria for this EV. How do they price this loan, fraud detection, and what happens when you reject that loan. Now we want to the loan management part, the third feature of this. Okay. Yes. So once you have disbursed that loan, now the two things that you have to do. Now you have to manage that loan, that is comes under the loan servicing part. Now you have to check for the default check that loan that you have already given, that should not be defaulted, or you have to do a continuous check on the default level, that whether that person is going to default or not. And again, related to that is a collection system. Once you know that loan is going to be defaulted or it has defaulted, how do you do the collection part? Now, why hybrid? Hybrid means that you have two channels. You have a digital channel, you have a manual channel. Manual consists of third party or a in-house team which goes to the borrower's home or their company location, factory, or the vehicle location, and they try to collect the vehicle or the person, anyone. And digital is again, you go through SMS or remind, or you select a third party which tries to solve your loan for you. So in the loan servicing part, you set up a loan repayment schedule, you do a payment processing, you do a monitoring dashboard. Loan repayment schedule is when you have given the loan, you are given a particular timeline for repayment of that loan, for month wise or a weekly wise, because many companies third party they have also launched a weekly wise approach or a month wise approach, because this ticket size of those loan is based on that ticket size of loan, maybe 2 lakh or 1 lakh. So they have tried to uh, for de-risking this that loan does not going to default, they have switched to that also. Now how do you do a payment processing? They you integrate your platform with the banks, with the NBFCs, and how do you monitor that loan, the reporting part and the analytics part, all the you check your own loan portfolio and everything that you do for compliance officers. And this is for the compliance officer, this. Okay, so user part will come to the next feature where I explain the different user, those who are operating in this ecosystem. So in the loan default check, you do a risk identification which identifies that where that loan is past due date, and if that past due date is more than 30 days, 60 days, 90 days. So if it goes under more than 90 days, then you go into more than 60 days, then you go into hybrid collection. If it goes into more than 90 days, then you go into manual collection, because in the 60 days we have already gone through the digital part of it. So after it has went into that 90 days period, then you know that it is getting out of the period, so you have to physically go and collect those loans. So if you do a loan default check, there is a loan modification also. So when you see that uh, the person borrower who has taken a loan, and he seems to be not in a position to uh, properly close that loan or not able to repay, so you modify that loan. Maybe you increase the tenure time, maybe you decrease the loan amount. You do multiple things to properly close that loan or reduce your risk. So this again, this is it has been described in a tabular format, that how do you collect, how do you do all this. Now coming on to the uh, fourth feature, the reporting and analytics part. Okay, fifth one is the user role and analytics metrics, user role and their permissions. So the analytics part is that I've divided the analytics into three, four categories. First one is the borrower related. So borrower related, they would want to see a report related to their repayment, and but they can select their particular date range, payment history. They would want to see their loan summary report. For the product related, if I'm a financing company and I want to see their loan portfolio health, so, and this is for the loan officer, a risk level based on the product level, based on the risk level, I can see the new loans, expected loss for quarter, loss for the quarter, for the half year. And this third one is for the collection related telematics data report. This is for the loan manager or the management. Vehicle data, date range for the particular vehicle, which vehicle ID is going has not been collected, or getting particular data report for them. And last one is the finance related. Overall, for the finance officer, what are the revenue for particular quarter, for the particular uh, date range, I can see. Now the feature, fifth feature we have was the different users in this ecosystem. So different user, first one is the borrower who is taking the loan. Second one is the loan officer, those who has the responsibility of managing the loan, handing out the loan, monitoring the loan, generating report, initiation and approval of all the loans. And third one is the risk analyst, those who is analyzing the risk associated with those loans. So they can view the credit report, they can access the risk engine, they can modify that engine. Collection agency is the fourth part. They can view the default list, those who are defaulted on their loan. And again is the banks, the third party service providers, and the IT admin. Now these are the related component, the UI UX part that lender is an NBFC with 2 years experience in the how that UI UX should be looking like, the timeline of completion of this uh, uh, product project. And these were the references that I made, user diagram, feature research, and some of the open questions that I thought would be design of the risk identifier engine, local regulation, the data privacy and security part. Okay, so I would like to share this. Yeah, this was the white paper, I think. Yes, a research report that I had studies. Yes, on electric vehicles, Indian automobile and manufacturing. So it was a very they had analyzed what is the current market position of the EV vehicles and what it is going to do, adoption of it. They have compared the ICE versus EV vehicle, internal combustion engine versus the electric vehicle range, 480 kilometer to currently 160 and 180 kilometer. So that would be all, I think. So this was one BRD that I had prepared, and in the future I will be sharing more on the product related or anything that I have been working on. So that's all. Thank you.